This is a video about investing in volatile financial markets, and I would like to share some advice. And this advice comes from someone who has been doing some empirical research in both quantitatively and qualitatively in the past. And I have some experience with investing on my own. So once again, this is not the authoritative advice, but I would want still to share some ideas, some insights I have, and these mostly are about first taking into account the large-scale changes already occurring internationally. And that means that we need to be taking time with both making a decision and looking for the outcomes, so that there is a lot of movement up and down, and this will be politically driven very likely, and so it means that one will need to have seen the end of the current volatility primarily in the political domain, so that the economic domain can find its own equilibrium. So that this is my theory on that. And then the second point is that one has to be very professional about that, so that if possible one should pull out of the decision making if one not is a professional him or herself. Then third point is that once again there are a lot of large-scale changes happening, and that should give pause, should give some reflection on the one hand, and on the other hand there is no way out of the investment game. So that one will have to be very careful about whether one sits on equity or not. And my advice would be one should be taking into account the residency taxation status, what tools are legally available in terms of investment, in terms of advice, in terms of a lot of things. And depends, of course, on the matter of funds one is investing, since what applies to small amounts will not necessarily be relevant to really big amounts, so that it really will be dependent on the risk involved, on all the benefits or all the drawbacks one faces as a large or small investor on the market, of course. And then one should always be factoring in taxation rate, legal rules applying to capital gains based on one's taxation residency by and large, so that especially if one also moves around, so that professional advice is going to be indispensable for all groups of investors. And then once again, from my point of view, we should not trust one's judgment. So that this is fourth point. There is no way to guess how the market is going to move. And I think this applies across many platforms, since some of them say that a lot of investors do lose money on their platform. But those individuals who enter the game via these platforms underestimate the risk, underestimate false patterns, underestimate a lot of things that one should not. And I think this is what my experience tells as an analyst, as a scholar. And I think that the fifth point is actually to maybe be ready to wait out a little bit the volatility. It will pass, since I think that in the current markets the main movers and shakers will still want to make some gains, and so that this is just a new phase, and it is very clearly driven by politics. But I think that the common interests will definitely prevail, and that we should also maybe take into account that a lot of things have moved internationally, so that if earlier 10, 20, 30, 40 years ago West was actually the most important player, and it still is arguably, the rest of the world is rising rapidly as well right now. So that I would say that one should simply expect a recalibration of the global markets only based on that, so that there is, I would say, a medium-term equilibrium one can expect, and that based on that there will be a lot more clarity after the bifurcation between, let's say, the West and the rest, and America and the rest, etc., etc. So that one will have to wait and see on the one hand, and then still act on the other hand. It is best left in the professional hands. So there you go.